Hello everyone, welcome back to my channel. So this video marks the end of the week number 36 in this road to 100k realized return challenge, and this has been one of the worst weeks on record as far as losses go, because as you can see here, the markets went down by a lot, even this past Friday, yesterday, and this basically is a reflection of what happened after US President Donald Trump announced that there would be reciprocal tariffs, widespread, far reaching tariffs for basically all its trading partners, and markets responded very negatively. I can even show you here, and keep in mind we are talking about an index, an ETF that tracks an index. This is not representative of individual stocks, but as you can see here, if you look at the chart for 1 week, basically ever since the tariffs were announced, which were here on April the 2nd, here at the end of the trading day, this was basically the reaction of the market. A huge gap, which is very, very, very uncommon for an index. Basically, a huge gap, and then for Friday, another big gap. And so markets basically tanked. They went into a complete panic mode, meltdown, and as things stand, we are well into bear market at this point. And the way things stand, I only see, but this is just my opinion, of course, take it as a face value. I think there are only two ways that this situation can be reversed and the stock market can recover, is that if the Fed, one of those is if the Fed responds with some announcement that it will strongly consider to lower interest rates, and actually follow up on that sentiment, on that intention, by actually lowering interest rates. Or if we see some economic data that basically does not materialize the worst fears that investors are having in terms of the economic slowdown, potential recession. And so I think it will take one or both of these two factors to meet, to be realized, so that the market can recover. Of course, there's going to be at some point at which the market will stop going down, because he can simply not go down to zero. But the way things stand at the moment, this is also a combination of the fear and the panic induced by the tariffs, but also the fact that the stock market was somewhat overvalued as a whole before this sequence of events took place. And so this is something that was bound to happen at some point, but of course the way it happened, it was not progressively. It went down in a huge way. I can show you here basically the VIX. The VIX is the indicator of volatility in the market, and it's basically a measure of the fear that exists in the market. And as you can see here, we are looking at data for the past 21 years, give or take, beginning from April 30th, 2004. And as you can see here, this spike, which is the spike of the current situation, this was actually the third worst panic event that occurred over these 21 years. The biggest one here, as you can see, was when the great financial crisis basically occurred. And then the second one was when the COVID-19 pandemic took hold. And so this is basically, there is no other spike that goes as high as this one. And so this is basically an event that happens at least so far 3 times over a little bit more than 20 years. So we should remain reasonably optimistic that this will not happen that often in the future. But yeah, we'll have to wait and see what happens. Basically, in terms of our situation, we still manage, of course, because the last week we did not realize any value for these calls that we sold on Pfizer here. Let me just complete this here because, of course, they expired here on April the 4th. So basically, we managed to accrue for this week a little bit less than 550 euros, which is still a reasonable amount, but we were able to do that because basically we had to, for some of these days, we had to roll over some positions that enable us to basically get more premium. But this was just the reason because the markets kept crashing, and so very quickly the calls that we sold on the QQQ became worthless very quickly. So we basically roll over the position at the lower strike price, and so that's how we managed to get additional premium out of it. Now, one of the things, as you can see here, we increased our holdings of Pfizer because we had keep in mind that we sold two put contracts with a strike price of 24, and of course these puts became very much in the money, and so we have to account for this assignment here. We collected the premium, and I'm going to put this value here, $1.07, which is basically the difference between the 24 and the 22.93 basically. But this is just a mark-to-market value. It doesn't mean anything when these shares are sold. We will eventually take that loss, mark-to-market loss, away. However, as things stand at the moment, we are very far away from our target strike price. Here, as you can see, at 26.5, there's basically no value for 1 week calls, and there is also very little value to be accrued for the 2 week call. And so basically the plan here, because we cannot afford to sell at a lower strike price because we don't have 0 DT options for Pfizer. It's only weekly calls. So to avoid any risk, the price coming back and hitting this strike price or hitting a lower strike price, the only way we'll be able to do this is to basically extend our maturity and then see how much premium we can accrue out of this. And so yeah, basically we have no indication how much will it be here for the 3 week call option, but this is something that we will have to do because we need to keep getting some premium out of this without taking the risk of realizing a loss on our shares. But yeah, the way things stand, we will have to continue to proceed with with a lot of caution here when it comes to the QQQ, selling 0 DT options, always with a strike price around 2.5 above the current stock price to avoid being called, and still allowing enough room for the stock to rise without hitting our strike price. And here is an indication of the fear. The options were reflecting an implied volatility of 40%, when usually under normal conditions the implied volatility is around 18 or 19, 20. So this is basically the premiums doubled or are reflecting double the amount of volatility that it should happen under normal conditions, which is insane to say the least. So yeah, as things stand at the moment, we'll have to continue to pursue our strategy this way and hope that the market somehow bottoms out and starts to recover. just to give you some update here on the realized returns. Now keep in mind that this is all the way up till April the 3rd. I cannot extend up until April the 4th because this activity statement is for a whole year and it does not allow to get more information out of it. So I have to pull up two activity statements. But basically it says here up until April the 3rd we have realized $33,354.33, and for this one, which is for only April the 4th, the next day, here, as you can see, the realized returns. Let me see what it is. I can't find it. Yeah. So basically, this is here around $98. So basically we'll have to sum up those. Keep in mind that this Pfizer put still will give us a gain because it expired and we kept the premium for ourselves. Also these calls, all these 28 calls expire worthless, and this call on the QQQ also expired worthless. So this can only be reflected on the on Tuesday on the activity statement that we will release on Tuesday. But so far, all we can do is just add up these two values for the our current standing. But for the time being, this is it. We will see what happens in the next week. Hopefully, things will start to get less bad and perhaps improving, because this was a reaction in the heat of the moment, and perhaps at some point the market will, or investors will realize, all right, this was an overreaction, and so let's jump back into the market. For the time being, feel free to leave your comments below. Any questions you may have, you can leave also in the comment section. You can also DM me on LinkedIn, and feel free also to like the video and subscribe to the channel. And we'll reconvene at the beginning rather of week on Monday for the beginning of the week number 37 in this challenge, and I'll see you there.